Hello and welcome to The Long Game. I am Taufik Iskandar from Punjana Capital, along with my colleagues bringing you a variety of perspectives. I'll be talking about the intersections of financial markets and entrepreneurship. We bring the leading voices shaping the conversations around issues affecting business and capital. Joining us today is our distinguished guest, Professor Tan Sri Andrew Sheng. He was born and raised in Sabah and Kota Kinabalu. He went to England to study. He had extensive experience in central banking and capital market, public policies, economics, and even regulator. Thank you, Tan Sri, for your time today.
Oh, great pleasure to be here.
Right. Tan Sri, there will be two parts of today's conversation. Part one, we want to ascertain and discern your specific views on capital market, in particular venture capital. And the second part, we would like to hear your general thoughts on current issues dominating our headlines. If I may, let me start with part one of the conversations. Before I jump on to my first questions, let me share with you some of the key facts from our observations. From 1998 to 2021, we have seen a divergence between Malaysia's banking sector and equity market. Our banking sector grew from 498 billion to 3.12 trillion, representing 528% growth over that time period, or 8.3% on 23-year compounded annual growth rate. Our equity market, on the other hand, grew from 375 billion to 1.8 trillion, or 381% growth over the time period, or 7.1% on the 23-year compounded annual growth rate. Even in our public markets, typically about 80% of the capital raised every year is in the form of debt instruments. So this shows a form of risk aversion among the capital market players, or a lack of risk sharing via equity, which is what, again, venture capital and private equity promotes. So my question to you, Tan Sri, is why is our capital market leaned more towards debt as opposed to risk sharing via equity? And how can we encourage more risk-taking activities and risk sharing?
Well, there are two fundamental reasons, maybe three, but let me go to the first two first. The first thing is that there's a tax bias between debt and equity. If you banks lend and they lose money on the principal, it's tax deductible. But if I invest in equity and I lose money on my share price, that's not tax deductible. So that's the first, that's immediately
incentive. Investors are not
a tax incentive to borrow, right? To borrow and to lend. So this is point number one. The second one, of course, is the leverage effect. Now, if I'm the owner of the company and I increase my debt relative to my equity, my ROE, the return on equity, increases. Mm-hmm. It's very simple, So if I were to make a profit of 1 and I borrow money, okay, and at a fixed interest rate, and if I'm earning the same rate as before, my equity is smaller, my return is bigger. So my return on equity looks good. The downside of this is fragility, because if I borrow everything and I can't repay for whatever reason, I lose everything, right? So to some extent, the debt is a risk transfer from the bank to the owner of capital, and the equity financing is risk sharing, because whoever holds the risk, I win, everybody wins, or every shareholder wins. I lose, every shareholder loses. So we're committed together. Now, this, two elements is very critical. There's a third element to this, which I said is what has happened, is that if I am the owner of equity, I don't want to lose control. So if I raise equity, I share profits. And of course, I share losses, but it creates the incentive is that I borrow, all the risks goes into the company, the ROE increases, but if anything happens, I may lose not that much. Okay, so what this three combination has created a very unhealthy global financial system in which equity keeps on growing faster than debt markets, that means bank loans and bonds, increase far faster than equity. So we now have a very unhealthy situation, except in the case of America. America is very, very special, superficially at least. So the result is we have excess debt in emerging markets, excess debt in advanced markets, but in the United States, because the stock market is so big relative to the banking system, they don't appear to be that leveraged. And so that's what Alan Greenspan said, we have a spare tire, you don't. So if your banking system is very big and you have a bank run, like what's happening with SVB, then the system needs a central bank to lend hugely, incurring fiscal deficits to rescue the banking system. Whereas the American system, if the banking system was a shock, the American stock market is deep enough to absorb that shock. And that's where we are at this stage.
Right. Tan Sri, perhaps I would like to dissect more from the points you've raised. And very much interested in how we can change the balance, the dynamics of our capital market that is driven by so-called passive capital holders or non-risk or less risk capital, i.e. in the form of debt. If I could recall, I was still young then. Before the 1998 financial crisis, I noticed entrepreneurship was common. Entrepreneurs were celebrated. Our stock market was buoyant. On the other hand, the banking sector was still at nascence. Equity market grew much faster than the banking sector. Do you see a correlation between entrepreneurship and risk sharing or promotions of equity as an instrument? That's number one. Number two, why suddenly the balance change? And now we have more of a bigger banking sector, less of the equity market, and people just do not want to pursue entrepreneurship anymore.
Well, the first thing is that I think our economics and finance strategies basically learn from the West. And the idea was, in the equity markets, if we become like NASDAQ and New York Stock Exchange, we've reached nirvana, right? And the thinking is that we're like a small aircraft, and it's very slow beginning, but we'll take off. Once we take off, we're nirvana. They tend to forget that planes crash or they go through huge turbulence. The banking system, again, we follow the West and we say, okay, if Western banks are done like this, we should go the same direction. And that's how our laws, our tax incentives follow the West. I mean, that. And then, of course, the Asian financial crisis happened. Now, I think you are very sharp. You brought in the key points, which is very deep. Pre-1998, we were the darlings of the global financial system, right? We were 30% of the MSCI, the Morgan Stanley, capital index, right? And everybody loved us because we were the Wild West. And at that point of time, pre-98, if you look at the statistics, the market cap of Bursa, KLSE, Kuala Lumpur Stock Exchange, was larger than the banking system. Now, what does that mean on a risk-sharing basis? This means, now, of course, it was Wild West. There's no doubt about it, right? And, people went in and made huge fortunes. Some of it was due to very shoddy market manipulation activities, excessive leverage, etc. But markets went up, markets went down, and they had very deep cushion. Come 98, the mentality was we need to repair the banking system. The banking system got over-leveraged itself. The corporate market got over-leveraged itself. Therefore, we should strengthen and reform the banking system with Basel II, right? And then, today with Basel III and increasingly Basel IV. So we tightly regulated the banking system to protect the depositor. So we became risk adverse. On the so the focus of government was protecting the depositors, but tended to neglect the factor that income and wealth comes from entrepreneurship. Now, how did I get that insight? Because I was invited to go to Dunhuang, which is on the edge of the desert between China and the Middle East. And of course, as you know, between China and the Middle East is massive desert. And it was due to the caravans. So I looked at the caravans and I said, well, could conventional banking finance these caravans? And it suddenly struck me, it's impossible, right? There's no amount of collateral, no amount of interest rate return that can finance these caravans, okay? The reason is the risks are huge. If you're driving a caravan through 1,000 miles of desert, you get lost, you get blown away, you get robbed in between. When you get to the oasis, your goods could be confiscated, you could get cheated, your own people could be cheating you, right? So it was all about risk-taking. But as we all know, the one caravan that comes back, is a unicorn. It makes fantastic profits that pays for all the losses of all the other caravans that get robbed or cheated or whatever.
What we call in this industry the power law distribution.
That's right. But what then you realize why in Dunhuang you had all these caves dedicated to Buddha, but the caravans were Arab, and that gave me an understanding that's Islamic finance. Because, you see, when you go through uncertainty, you must have faith. You must have trust. And Islamic finance is actually all about risk sharing, risk taking, and all the profits, a lot of them came from a trader background. So that is the fundamental difference between the Islamic finance. It's about risk equity sharing with ethics and values, right? Whereas the Western one is, once we get rid of usury, you can be predatory, okay? When a bank lends to a customer, it's risk transfer. I'm transferring all my risk to the customer because I'm taking collateral. Okay? So the whole system's getting distorted. Now, that means that we need to go back to basics. And we're now seeing the basics post-1998 in the form of Silicon Valley. What is Silicon Valley financing? Now, let's not talk about Silicon Valley Bank, but the Silicon Valley financing is basically knowledge-based entrepreneurship entering into high-risk areas, but with investors who understand that risk, but with high gain. So if I invest in one unicorn, which has a return of 1 billion, I don't care about the 99 or 990 other unicorn, not startups that I invested in that either don't make money or whatever. And so as long as people are not cheating in the game, you back these young ones and they make that breakthrough, you're a big winner. Right? And of course, what the ecosystem in Silicon Valley is as follows, and this is very important for us to understand. Silicon Valley is an ecosystem. It's 5 universities, Caltech, Stanford, UC Berkeley, UC San Francisco, and maybe even UCLA. Their top technology professors were the ones who said, I am now moving out into the private sector to start up. Now, of course, they borrowed a lot of technology from the Defense Department, things like mouse and, so the Fairchilds of this world, the Apples of this world, the Intels of this world were these professors. When they went out to the private sector, their fellow professors and students in the universities became their R&D. Not just their R&D, they not only subcontracted that R&D to these universities, the students became their staff. So, and that's why today, the 40% of the people hires in Silicon Valley don't finish their degrees because, if I've done an app or I've done a software or I've invented particularly circuit that company can use, why do I need to finish my degree? I just go there and work and I'll become I might become a billionaire. I've definitely become a millionaire. So the ecosystem is now successful. Okay, so when you go to Silicon Valley, you suddenly, they don't seem to have that much hardware. It's all software. Now, what does that tell you? Why can't we replicate this in Malaysia? Right? Small countries, Taiwan is an example, South Korea is an example, Finland's another example, with very good, and Holland is in fact is a very good example, with very good universities, they come up with products that become world-breaking and they make a fortune. And then they bring up the rest of the country, right? So it doesn't really matter. It's not about the average. We have to bring up everybody in the country. We bring up a few people in the country who brings that wealth up. And as long as these reinvest back in the country, then the whole country will do well.
Right. Tan Sri, very interesting observation about how it started as Islamic finance. You raised that Islamic finance really, truly represents that finance is a service and it's based on trust and confidence. And in recent years, and you think Silicon Valley actually encapsulate that essence of Islamic finance, financial services based on trust. I would like to share a couple of trivia with our listeners, and this is where it gets even more interesting. The idea of VC funding or venture capital here is relatively a new concept of finance. Started in 1940s when, after the World War II, soldiers came back from war with the dream of starting new ventures and pursue entrepreneurship. Before that, getting risk capital was difficult, as most of the capital then were trapped with family offices, Rockefeller, Vanderbilt, and banks were, like you mentioned, risk averse. In the 1940s, we had ARDC and J.H. Whitney, which then were truly represented VCs in the US. And ARDC went on to generate one of the best venture returns in history. I think its investment in Digital Equipment Corporation alone, DEC, generated more than 1,000 MOIC or multiple on invested capital, and that was in 1957. Then in 1970s and 1980s, we saw the birth of Sequoia Capital, Kleiner Perkins, and they created some of today's biggest companies, Apple, Genentech, FedEx, Microsoft, and Electronic Arts. And in the period of 1990s to dot-com bubble, we saw a lot of VC-backed deals, although at that point turned out to be extremely overvalued, but yet some of them turned out to be successful ventures. And they are Yahoo, Amazon, eBay, and even Alibaba in China. This batch of companies created a whole new wave of innovation and digitalization. However, Malaysia VC started relatively late in 1984 with the establishment of Malaysian Ventures in Berhad. But fast forward almost 4 decades, the local VC scene is still underdeveloped. And you mentioned venture capital, finance is all about the ecosystem. To us, ecosystem is built on at least 4 capital. One is, of course, financial capital. Second is built on talent capital, human capital. Third is built on network capital. And lastly is regulatory capital. Why we didn't actually generate our own ecosystem? Which part of these equations that we failed to nurture and support?
I think, again, I would like to say we got all these ideas from the West. But there was one thing that the West didn't understand, is that when you become more and more specialized, you become more and more siloed. That means if I am a carpenter, I see every problem as a nail. If I am a banker, my mission is to be risk averse. But if I look at everything as a banker and I ignore risk, I ignore opportunity, I can't take risk, and therefore I become more and more conservative, and risk takers will overtake me. So we really need to go back to ecosystem is about holistic thinking. And that's why when I quoted the example of Silicon Valley, it struck me. Silicon Valley is ABC, academia, business, and civil service. The civil servants understood, and in fact, even the Defense Department said, well, we need you to develop this technology for me. And by the way, I don't mind if you actually use this technology to make some money. And that's how the silicon chip happened, right? The transistor happened. Because, the US Defense Department wanted transistors to do some more computing. And suddenly, somebody said, wow, we can make this, Hewlett-Packard said, I can make a calculator for this. And there's a huge market for calculators. My first calculator, I paid $1,000 for a Hewlett-Packard, a complex calculator. And it was amazing. It was mind-blowing. So the academia, needs to generate that talent for the business. The business is the entrepreneur taking and making the money, and the civil service needs to work with them to have the knowledge. So actually, the future of the world is about knowledge-based economy. It's those who are smarter, who think strategically and act strategically, that grasp the opportunities. Okay? Now, if you are pure academic and you only talk but do not walk, who is doing the walking in this, taking the risk, is the business sector, right? And who has to foster that? Ultimately, it's the civil service. It's the government. So really, we really need to have we need to understand this ecosystem in which we are in this all together. Now, if we can't get our act together, it's the social capital, but it's also the business model. So, Eric Beinhocker, who wrote this brilliant book, I think, in my view, about the origin of wealth. The origin of wealth is three things: physical capital, which is what we inherit, okay, or we invest in hardware, that's physical capital, things we can touch. Then there's social capital. Social capital would include human capital, right? But, now, so that the third one is the business model. Now, this is where, the difference between a private enterprise, which is profit-making, and a social enterprise. A social enterprise doesn't make money. It's not supposed to make money. But if a social enterprise depends upon charity, it's not sustainable. So actually, if you really think about the mom and pop shops, the people who make nasi lemak, or the char kway teow, or whatever, or the even vegetable seller, you say that they are private enterprise. Yes, they are private enterprise, but actually social enterprise, because they don't make profit. They just keep mom and dad enough money to pay for their pensions and bring their children up, and keep themselves, pay for their medical bills, etc. So actually, the line between private enterprise, small and medium enterprise, and social enterprise is actually very small. But you think about it. All our tax benefits, all our regulation is to support the big companies. But the small and medium enterprises, they account for 80% of the employment. They account for only 40% of GDP. But, that GDP is not calculated, is wrongly calculated, because as you know, GDP does not include family activity. So if I marry my housekeeper, GDP goes down, because the services that my housekeeper provides that is paid for is included in GDP. But the minute we're married, it's not included. I'm sorry, this is very not politically correct or not gender correct, but it can be either way, right? So the thinking is wrong now. We really need to work together, academia, business, and civil service, in one seamless partnership to grow our ecosystem. And risk capital is the business model of this, is right at the heart of it.
Let me put this into smaller pieces so that our listeners would understand. So coming back to how ecosystem is created, 4 types of capital. First, financial capitals, and we've discussed this. We have a lot of capital liquidity in Malaysia, in the system, but they are not risk capital. We are short of risk capital. That's one. That's a problem we have. Another one, we talk about network capital. Your point, Tan Sri, is that our approach is wrong. It's supposed to be holistic. And network is not built like a plantation. It's not linear. It's a complex web. Everyone has a part to play. And we failed to nurture that. So that is our failure. And the third part is regulatory capital. And I think I can sense what you try to bring up, that the government is supposed to be a facilitator. We should not crowd out private enterprises. And trying to get a sustainable business model is very important here, and how government can actually facilitate that. And government has not done that enough in that regard. Now, another part is talent, human capital. What actually went wrong, Tan Sri? I mean, where do you think we are lacking compared to our regional peers? Let me give you an anecdote, some pointers, Tan Sri. There were 52 new unicorns created in Southeast Asia between 2014 and 2021. 28 were based in Singapore, 13 were Indonesian, 5 from Vietnam, and 4 from Thailand. And there's only 1 from Malaysia. What went wrong? Why couldn't we generate enough entrepreneurs and fast-growing companies? What's lacking in terms of human capital development in this country?
Well, people tend. You see, this is again. I blame the West, right? The West has talked freedom, talked democracy, but actually delivered inequality. And they forgot that politics and economics and everything is really about people. The issue is that, in the post-1969 social consensus, when was the last time we sat down together in the middle of a crisis? Where do we go from here? And I think that the new economic policy was absolutely correct. We were the first government post-colonialism to deliver affirmative action. And we said we need to bring the majority of the people up in terms of knowledge base. And I think the NEP, if I may say so, was spectacularly successful in raising the majority into professional class. Whereas previously, it was only the urban people who were professionals and the rural people did not have a chance to move to become professionals. But having moved to the professional class, the country cannot come together unless we generate the Bumiputra entrepreneurial class. Because let's face it, I will never become rich. I will become moderately prosperous by being a professional. Now, as you know, if I am a CEO of a GLC, I will be paid in the millions. Okay, that's fine. But I will never make it to the billions. Okay? And how do we get into the billions? Let's be blunt about it, not through crony capitalism, but through genuine creation of risk capital in the unicorns that you talk about. So why is it that we haven't done this? And the part of the answer is our human capital strategy. What we've done, particularly post-1998, was that, as I said, we became risk adverse. And then we said, okay, we will keep on importing cheap labor And by the way, we don't mind exporting our top labor. What kind of strategy is that? That strategy is I'm throwing out, I'm sorry to use a card game, all my trump cards and bringing in the cheap cards. Now, the cheap labor is brought in has a very bad side effect. The side effect is that we're keeping wages of our young down. When I joined Bank Negara, nearly 50 years ago now, right? 40 plus years ago now. My salary is still higher than the present graduate that's coming out. The daughter of a friend of mine in Kota Kinabalu, fresh graduate, 1,500 ringgit per month. That's minimum wage. It doesn't make sense. We're supposed to become more prosperous. We've ended up our young people being paid less because as long as we pay cheap labor, import cheap labor. The worst part of that importing that cheap labor is now we are training Indonesian laborers in our construction industry and our plantation industry to regenerate the construction industry in Indonesia and the plantation in Indonesia. And Indonesia, let's be blunt about it. Sooner or later, we're going to compete in the same area, right? So, our strategy needs to be rethought.
Yeah, you're right. In fact, interesting observation about the salary, and seemingly as a simple problem, but it creates other bigger problems of cost of living, problems of a highly leveraged household, problem of underfunded pension. It's all stem from the fact that we suppress wages in the country. But I would like to bring your point just now about new economic policy, and because this platform is supposed to be thought-provoking, I would love to dissect your views on this. I've listened to your talks before, and you obviously a supporter of new economic policies. You mentioned how we did well with financial literacy, setting up Tabung Haji, pilgrimage fund, to incentivize Muslim depositors to invest. We set up Permodalan Nasional Berhad. It's part of promoting financial inclusion and equity. But there's only a portion of financial literacy. Another portion is entrepreneurship. And this is where we failed to nurture many more Bumiputra entrepreneurs in particular and promote social equity in the country. But Tan Sri, talking about this entrepreneurship and talking about the so-called social and wealth redistribution, we need government. Government is the agent of redistributive agent. I mean, to borrow Paul Samuelson, that's the role of government. I mean, through taxes and subsidies, right? How can actually government be more effective in promoting social equity, financial inclusion, bringing up so-called the wealth of the largest community when trust is very low? When people actually has huge trust deficit when it comes to government, how can the government, who's supposed to be a redistributive agent, be effective in this regard? What do you think?
Trust is two things. Trust is you can talk, but you must walk. Its actions speak louder than words, right? So the walking is very, very critical. What you do is very important. Look, not what I say, but what I do. Point number one. Point number two, for us to work together requires a conversation. Husband and wives always quarrel, but hopefully it does not end up in a divorce. The conversation is the one that keeps us together. And this country has not had a serious conversation between the communities, between the urban and the rural, between different races, okay, or religion, right? We have begun to move into each other's, sorry to use the word, gated communities. And as long as we don't have this proper conversation, we can't forge a new way forward, right? Okay, and that conversation is now necessary for us, however difficult it is. And we are always worried about being too sensitive. And that's why, 2 days ago, I gave a lecture to a Malaysian Chinese community And I said, look, if the Chinese community does not help the majority in entrepreneurship, this country cannot go forward. So it's not just, the government must do something. It's not. The government cannot do everything. Right? The government cannot do everything. And, you said, business must do something. Well, if the purpose of business is to make money, why should they, as we all say, even in the Islamic community, do all the rich give zakat? I mean, some, but not. Maybe they should. Some of them should give more. The same, with the other communities, right? So the key issue here is that it's not the C stands not just for civil servants, but civil society. And so civil society, need to build, to provide the healthcare. When our parents grow old, we either move them into a profit-making care home, or we take care of them, or a social enterprise takes care of them. If we rely only upon the government to take care of them, it doesn't always work, because if it's very difficult for a civil servant to provide that emotional love that the community can give for themselves, right? And as Malaysia also begins to age, it's like what President Kennedy said: don't ask what your country can do for you, ask what you can do for your country. And I'm not using the word country. I am saying do what we can for our community, right? And until we have that mindset, rather than the mindset is me, rather than we, you see, the Western failure is too much me and not enough we, right? And some of the socialist countries is too much we and not enough me, okay? So what we really need is to get the right balance. Now, every society will get its own balance. So take, for example, Scandinavia, right? The Northern European countries, are now today most successful. And yet, they have the highest tax in the world. And why is it that the rich Scandinavians are willing to pay that tax? And the answer is, I want a safe community.
And there's trust in the system. Right? So, to that extent, now what my deep message is really this: there is no one-size-fits-all strategy like the Washington Consensus that can fit us. We, all of us, need to find our own future forward, either together as a family, community, or a country, or we go our separate ways. Right? Now, the challenge today actually is not about internal. Of course it is internal. But the real challenge is that Malaysia, within the larger community, is that other countries, which we used to say, they were far behind us, are now already in the rear mirror, getting closer and closer, and some of them will disappear from the rear mirror because they are going to be ahead of us. So our real issue now is, how do we in Malaysia work together to take us to the next level? Tan Sri, another one questioned on this capital market. You mentioned we imported cheap labor, we export the brightest mind. But one thing we also export is a financial capital. The figure shows that we are net exporter of financial capital. I would like to ask for your thoughts here. What is your view on Malaysia's regulatory landscape, in particular capital control? How do we balance the need to have a more supportive environment to support cross-border investment? And for venture capital, the default currency is still US dollar. And the opportunity is not just limited to Malaysia, it's becoming a regional opportunity. Malaysia as a gateway to ASEAN. That is a story that we've been told several times. So how do we balance the need for minimal frictions on capital flows and the fears of currency devaluations, fear of capital outflows? How do we What is your view on this?
Well, the capital outflow numbers are very clear, right? Malaysia makes 3% of GDP every year in current account surplus. That's phenomenal. That's very good by any standards. And yet for the last 30 years, our foreign exchange reserve has been flat at around $100 billion. What does that tell you? Capital is flowing out. Yes. And capital will continue to flow out if the risk return on capital is higher abroad than risk return capital internally. And if your growth rate is only 4%, and let's say in Indonesia or the rest of ASEAN will be somewhere between 6 to 8%, of course the risk capital will go out. We don't have the scale, right? That means, Malaysia is only 35 million population, 30, somewhere between 33 to 35 million population. Vietnam and Philippines 100 million, and Indonesia is 288 million. So we don't have that scale. Okay, that's point number one. Secondly, because we're a small country, we don't necessarily have that speed if our regulation are such is that we're imposing Western standard without the Western infrastructure, etc. Let me give you an example. Why are we implementing Basel III? Basel III is cancer medicine for Western banks, like the Credit Suisse of this world, that have not solved their problem since 2008.
And the complex use of derivatives.
Right?
Yeah.
Because the complex, not just that, but because the management has got the, risk management wrong, the regulation has not been complete, everything, etc. And yet we have no failure in Malaysia since 1998. So our problem is dengue, it's not cancer. So why are we taking it? Now, in principle, it's absolutely correct. But the West has imposed this on us, persuading that we must take this cancer medicine, whereas at the first sight of the pandemic, notice what has happened. They totally abandoned. They postponed Basel III, but effectively they've abandoned it. Now, they haven't abandoned it in principle. They've abandoned in detail. All the stress tests that was imposed after in Basel III and now Basel IV did not rescue SVB.
And that happens under the nose of the Fed.
No, it happens among those who proclaim they are the best and the brightest. If the best and the brightest are Bodo, why are we following them? That's my question. So my view about regulatory capital, our own thing, is that we now need to strategize. When the best and the brightest are wrong, what do we do? And the answer is, we must have more confidence in ourselves. Actually, we're not that bad. Okay? We've done well. But we cannot rest on our laurels, because if you rest on your laurels and become complacent, others are overtaking you. So we need to, like people talk about reset. We're not reset, we're refresh. We go back to the basics. What is it that we feel are most important for us? And the answer is national unity, prosperity for all, right? These goals are not different from the Western goals, except they practice it wrongly. Because they're delivering inequality, right? They talk peace, but war is now coming, right? Whereas what we need to do now is to strengthen ourselves. Because whatever we talk, if we become weaker and weaker, we have no more voice in the global community.
And this is where your view matters, Tan Sri. You mentioned from your observation that the system is built on elitist perspective. It's very important to bring back the system to the community it serves, the original purpose of it. And there's no such thing as best practices, but practices that best fit for the community and the country.
Absolutely right. Best fit is a brainwash to tell you that I am best, rules order is my rules, you obey. Okay? The game's changed. The game has already changed. And so, the rise of the BRICS countries, right, whether you agree or disagree, is changing the game. And so therefore, what is our strategy to strengthen ourselves in the coming tsunamis, put it this way, if not big waves. That's the issue. So if the best and brightest, what we are seeing is that some of the best and brightest are already disturbed by the first tsunami wave that's coming, and we know that there are bigger waves behind. If the best and brightest are doing this, why are we following them? Right? We really need to think for ourselves. And that's what my challenge to Malaysia. I'm not smart enough to do this. Okay. My viewpoint is just to point out what I thought we really need to rethink the game. Right? We need to reimagine our future. Right? And reimagining our future means we need to reimagine with all of us. Because I cannot say, I stand here, I reimagine for you, and then you must obey. That's the wrong strategy. What we really is Musyawara. ASEAN's strategy is consensus. We are slow, yes, but the family agrees, the community agrees, and therefore we move forward. That's our strength, right? That's our strength. The West, has to, they preach democracy, but they're 1 billion out of the world's 8 billion, and they said that 1 billion says, I am the best and brightest, I'm the richest, therefore I must be right. That's no longer true. Even logically is no longer true, and factually also. So I think what we now need to do is to forge this, domestic conversation, in which everybody's views must be heard, and, there will be tensions because that's, family quarrels are, never short of that. But if we can forge that consensus and see where we go forward, and how do we help the majority, right, develop that entrepreneurial spirit rather than just pure professionalism. Professionalism is good, but the professionalism today is under real stress.
And you're right, Tan Sri. We focus so much on determining when it's right to have that conversation, when there's actually no perfect conversation. The conversation has to start now.
That's right.
Thank you very much, Tan Sri, for the first part of today's episode. And I would like to bring your attention to the second part, where we discern your general thoughts on current issues dominating headlines. And there are two issues in particular that affects the capital market. One is, of course, the period of a decade-long low interest rate came to an end, and we have seen repricing of risk asset and capital, and recently we've got a collapse of SVB, Silicon Valley Bank, and over the weekend we had almost near collapse of Credit Suisse. So this is all again victims of so-called decade-long of low interest rate where risks are not appropriately valued, a lot of risk-taking activities that didn't lead to real productive outcome. And I would like to bring your attention to this question, and I know your views, is that this quantitative easing that we have seen actually failed. And didn't incentivize people to focus on long-term in investment. The fact that we can make superlative returns in short-term speculating, why do we need to invest for long-term? That's basically quantitative easing, and that's why it didn't generate enough productivity growth. But at the same time, on the other part of the equation, people are worried that cost of capital is going up. How about support to entrepreneurs, innovations, risky ventures? Will it actually slow things down? Will it affect these risk-taking activities? So what is your thought of this repricing of risk asset, and what does it mean to capital market? Right.
This is a very good question. QE is opium 2.0 or 4.0. Depending on how you look at it. Quantitative easing has brought interest rate down to zero. And my Muslim friends always like my joke. Well, at zero interest rate, the West is practicing Islamic finance. But they're not, of course. I mean, this is a joke. But the more serious point is, at zero interest rate, the discounted cash flow model based upon the discounted rate of zero is infinity. That's why we've got bubbles everywhere. In fact, even the cyber currency market is a bubble, a byproduct of QE, right? And that is why when nominal interest rates are come back again, it's a basic reminder that there are limits to leverage. The physical products are being depleted, and that's why commodity prices are moving up, like energy, for example, right? And rare minerals are getting rarer and rarer, or more and more pricey. But every crisis brings its opportunities. And that's why when the crisis occurs, we should not be looking at the damage. Of course, we should look at the damage. You know, after the banking troubles that we had in Malaysia, I went to the World Bank, and I helped write this book about how do you deal with crisis. Crisis is an event. Reform or restructuring is a process. And it's a process of 4 stages, of which some of them are together. The first one, of course, is diagnosis. What went wrong? You know, what went wrong? Because if you don't know what went wrong, you can't, repair it. The second one is damage control. The third one is resource allocation. I mean, not just resource allocation, loss allocation. Who bears the loss? Well, today QE basically says I monetize all the losses so that those people who should be punished, actually everybody pays. Nobody goes to jail, everybody pays, and then we carry on. So the elite keeps on becoming too big to fail, and nobody loses. But actually everybody has lost, right? Then the final one in the reform one is how do we actually change the incentives that actually will restore this. Now, our difficulty for a small country like Malaysia is that as long as the big boys are practicing QE, we are, the sangkancil, dalam perang gajah. We are the small animals that are being trampled when the big elephants fight. And so, therefore, we must be smarter. We must be more nimble. We must be more faster than the gajah. Otherwise, we will be trampled, right? But are we doing this? Now, if the sangkancil themselves are fighting with each other, how do fight the gajah in their, the big joke was, when gajah fight, the grass gets trampled, but when the gajah make laugh, the grass also gets trampled, right? So we have to be very realistic. We have to think about what is best for us. And of course, hopefully, because of our ethics, our caring for the environment, right? So the natural balance is such that we all live together. The gajah can live with the sangkancil, can live with the grass. I mean, that's the natural trend of things. So, okay, coming back to the what do we do now? As I said, focus not on the finance, which is only a virtual part of this. Focus on the real economy. The real economy is where the technology really matters. How do we take care of our forests? Don't cut it down. How we should not pollute our beautiful seas, right? How do we get our young to work on green, inclusive projects that the big markets need? Okay, so let me give you an illustration. The Chinese are bigger than us. They're faster than us. They've got scope more than us. But their products are not very good in English, nor in Arabic, nor in Indian. That's why, to some extent, of course, we also have one disadvantage, and that is, of course, AI is now doing instant translations. Okay? But Malaysia has, Malays who have, the Muslims who have the whole Middle East market. Our Indian community has the Indian market. Our Chinese community has the Chinese market. And because most of us speak English, we have the whole global market. So we have a huge advantage, right, over other people. That's when allowing the young ones that coming to Penjana capital, I see the young ones, I get very encouraged. Over the last few days, speaking to the young entrepreneurs, I get very encouraged. They have got the courage and the willingness to take risk. How do we now, as, let me put it this way, government leaders, business leaders, community leaders, civil servants, help these young people grow?
So, Tan Sri, in essence, what you're trying to say is, yes, there will be repricing of risks, and that will affect capital markets. But more importantly is we have to put that capital to good use on productive investments, focus on what we're good at, the competitive advantage, focus on the real economy and what does it mean to Malaysia and its community. Thanks, Tan Sri. But you also mentioned very interesting anecdotes. This is about the two gajahs are fighting and what does it mean to country like us. So they are also gathering storm clouds of possible conflicts between countries. And these conflicts are not just military conflicts, but also economic trade conflicts. Even though proverbial thunderstorm has not yet burst forth. However, we do face the prospect of grey, chilling and unceasing drizzle of Cold War, I would call it, especially given the military aggression in Ukraine-Russia border, which could spread to Chinese Strait and Korean Strait, if not in the peninsula. And South China Sea is not an exception. In view of the current geopolitical risks, Tan Sri, how can ASEAN, supposed to be a neutral zone, navigate this? And specifically for Malaysia, what does it mean and what is our leverage?
Well, the solution has already been taken by ASEAN. It is a neutral zone. We should not say who is right, who is wrong. We have our own interests. We take care of our own interests, right? And so therefore, in a gathering storm, do you wish to have a weaker family and a weaker house, or a stronger house and a stronger family in greater adversity? The answer must be the latter, right? We have to self-strengthen ourselves. That is why when a family is divided, we cannot deal with these big storms, the big waves that are coming ahead, right? So priority is not about to blame the outside, to blame others, but really now to sit down and say, big storms are coming. The higher nominal interest rate is going to create large losses in the global markets. But if we are able to demonstrate to the rest of the world that we take care of not just of ourselves, but take care of their capital, if they invest in us, everybody wins. Right?
So we should actually use this as a negotiating tool, right? We
Absolutely.
become the darling, the pretty girl in kampong. So we should have caught both sides.
Absolutely.
Yeah.
Right? Why should we, take sides? I think everybody will be courting us. In ASEAN and in Malaysia, we should be, the winner amongst all this.
And within Southeast Asia, within ASEAN, do you think Malaysia has a place?
We have this place. I mean, Malaysia is paradise in my personal view. Why have I come back? I mean, I've spent years outside, right? I mean, it's the best food, it's the best friends, the best family, best people. Okay, we have everything except that we don't seem to be able to. Let's put it this way, get our act together, right? And we can. I think I sincerely believe this.
And Tan Sri, do you think, one of our biggest strengths is our close proximity to Southeast Asia, which is, again, a fast-growing market, fast to be the fourth largest market by 2030, and also our deeply rooted cultural linkages to most of the countries in Southeast Asia. Do you think we have harnessed this competitive advantage?
It's happening already. I see very young, Malay entrepreneurs in the digital space. They're beginning to design software for the Islamic market, which is fantastic. I went back to Sabah, and there's this Sino-Kadazan girl who actually, use digital printing to use the indigenous Kadazan, Murut, Bajau designs, and then print on cotton so that now people can wear T-shirts and formal dresses with the indigenous designs, and suddenly there's a huge demand for her products, right? I see all this happening. It is happening amongst the young. Now the startup, and we now come back to the fundamental point of this discussion. Startups need three things. And it's like a three-leg stool. It needs, first and foremost, talent. Then it needs funding, right? And then it needs branding. Because if nobody knows about your talent, you don't have the value.
Underappreciated, undervalued.
Yeah, underappreciated, right? So if we don't know how to brand ourselves, and this is not just branding about a small startup, but the branding of Malaysia, right? If the branding of Malaysia is associated with one, MDB or whatever it is, then it cannot, we have to move beyond that, right? So the issue then is, how do we create the branding of our young stars? How do we create the branding for the country as a whole? Okay, that now needs strategic thinking and strategic action.
Thank you again, Tan Sri. Before wrapping up the second part of today's conversation, we have three standing questions that we will ask all our guest speakers. First question, Tan Sri. If you could invest in or starting up any business, regardless of current market trends, and assuming you have all the money in the world, what would it be and why?
Well, I think strategic minerals, rare minerals are getting rarer and rarer. I know Malaysians have, some concerns about rare minerals, but Malaysia does have rare minerals. And I think, in this world, when everybody now needs it for the next innovation, that is something to be treasured. We need to think much more clearly about that area.
Interesting, Tan Sri. So you would do a business where Malaysia enjoy natural competitive advantage, which is rare minerals.
Well, I wouldn't do that business. I mean, it's something that I would invest in, right? Because I'm too old to do any business. I don't have that courage, neither the courage nor the energy left. But you asked me a question about, where would I allocate the resources? Unfortunately, there's not much, company that's listed that's doing this area, right? So most of the rare earth companies are actually abroad.
Excellent. Second question, Tan Sri. What do you consider a must-read book or must-listen podcast?
Well, the must-read book at this point of time is definitely Chip War. And the reason is, I'm based in Penang, and Penang, as you know, has the 6th or the 7th largest semiconductor, processing and assembly or manufacturing, testing, or whatever you call it. So the chip war, not just in between US and China, but US against everybody else, will have huge implication for us. And I think that's an area that, for me, for Malaysians, since, manufacturing and high technology manufacturing now accounts for, in 2021, 70% of Malaysians' exports, right? That's manufacturing side. So I think to understand the history of the chip and the way the West particularly is thinking about this issue would be very fundamental for our next strategy.
Right. Thanks, Tan Sri. And a little trivia. You raise Penang as a case. There is an ecosystem over there. We have quite an advanced E&E supply chain based out of Penang and Kulim. And for our listeners out there, that ecosystem was driven by Intel coming into Penang in 1970, 1971. And it was funded primarily through venture capital investment. They raised $2.5 million at the time in 1969. And Andy Grove decided to convince the other two co-founders for Intel to set up their first offshore facility. And they chose Penang for their first production facility outside US. Third question, Tan Sri. What advice would you offer to aspiring entrepreneurs out there, the doers, the dreamers, the change makers?
It's great to dream, but it's very tough to deliver. And so, people can help you. But the first thing to remember is that people's help is only to help yourself. If you do not know how to help yourself, nobody can help you. The Cold War, is a little bit like Hollywood. The Hollywood always assumed that the 7th Cavalry, somebody is coming and the story will end good. The answer is maybe there's nobody coming to help us except ourselves.
Thank you, Tan Sri, for a truly insightful, positive dialogue. I really enjoy every bit of this conversation. And to all our subscribers out there, thanks for listening. If you enjoy the show, please share The Long Game with friends or colleagues, or leave us a review on Spotify or Apple and Google Podcasts. My colleagues and I will be back here to give you some longer-term perspective. Thank you for now. Till then, bye for now.